Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Yeah, let's do it. And I think with a company this ambitious, you have to start with the hard reality, the financials.
Absolutely. And the latest numbers, well, they definitely showed some significant short-term pain, despite all that long-term potential.
So what happened with the Q3 earnings? I heard it was a pretty big miss.
It was a clear miss that definitely rattled the market a bit. The company posted an earnings per share loss of -20 cents.
Okay, and what was the consensus looking for?
The forecast was for -13 cents. So that's a 53, almost 54% negative surprise.
Wow.
Yeah, and that kind of news immediately sent the stock down, 6.5% in after-hours trading?
That's a sharp reaction. It really shows how much this is priced on future hope, not current numbers.
What about the operational side, the cash burn?
Still substantial. I mean, the operating loss was $36.3 million.
Which for a pre-revenue company in this space isn't totally surprising, but it's a big number.
It is, and we have to be realistic. Near-term profitability just isn't in the cards. They're going to keep seeing losses, though the outlook does get a little better, maybe recovering towards, say, -39 cents EPS by 2027.
Okay, so that brings up the big question. Cash. Nuclear is just incredibly capital intensive. Do they have the runway to survive that kind of burn?
On the flip side, yes, they do have a good amount of cash. Their balance sheet is strong.
How strong?
About $1.2 billion in cash and marketable securities. So they're not going out of business tomorrow.
But $1.2 billion doesn't last forever when you're building nuclear reactors.
Exactly. And that's where the other shoe drops. They recently filed a shelf registration.
For how much? To potentially offer up to $3.5 billion in various securities.
$3.5 billion. Okay, so for anyone holding the stock now, that immediately screams risk of pretty significant dilution down the road.
It's a huge risk. And it's why the stock trades at such an elevated valuation.
Yeah.
We're talking anywhere from 11 to over 22 times book value. It's highly speculative.
When a stock is trading that high on pure potential, I always want to know what the insiders are doing. What are the people running the show doing with their own shares?
And that's another point of concern for some. There has been some notable insider selling recently.
Like who?
The CEO sold 300,000 shares. The CFO sold just over 92,000.
So that's almost 500,000 shares sold by insiders in the last 90 days or so.
Over 500,000, yeah. Now, to be fair, insiders do still own almost 19% of the company, which is a lot. But
that selling doesn't look great when you're asking new investors to stomach the dilution risk.
it creates friction.
Yeah.
Exactly.
Okay, so that's the tough financial picture. Let's pivot to the bull case. The stock is up over 300% this year, so investors are clearly willing to look past those risks. Why?
The reason is acceleration. Specifically, acceleration on the regulatory front. This is the whole story.
They found a way to speed up the notoriously slow nuclear licensing process.
They did. They got a major breakthrough with the Department of Energy's Reactor Pilot Program, the RPP.
And what does that actually do? Does it let them bypass the Nuclear Regulatory Commission, the NRC?
No, not bypass. It's sort of.
Okay.
It complements the NRC process. But the key is it changes the sequence of events.
Okay, how so?
Well, they were selected for 3 projects under this program, including their main one, the Aurora Powerhouse out in Idaho.
Right.
And this RPP selection gives them a DOE authorization pathway that, and this is the crucial part, allows construction to begin before the full NRC operating approvals are finalized.
So they can actually start building now, put shovels in the ground.
Exactly. It shifts the whole process from, just theorizing and paperwork to actual executing and building.
That's a massive advantage. It could shave years off the timeline. Is there proof they're actually moving on this?
Oh, yeah. Physical construction has officially started at the Idaho site. They've mobilized major equipment.
And what about the supply chain? That's another place these big projects get bogged down, waiting for parts.
They're way ahead of it. They signed a binding contract with Siemens Energy.
For what specifically?
For the power conversion system. That's the SST-600 steam turbine and the generator. This is a key long lead component.
So they've locked in one of the biggest, most complex pieces of the puzzle. That mitigates a ton of risk.
A ton of risk. It means when the reactor is ready, the part that turns the heat into electricity is already secured.
Okay, so regulatory acceleration, construction underway. But I think the most disruptive part of their story is the fuel strategy.
It really is. This is what creates their true moat. It addresses the single biggest bottleneck for the entire advanced nuclear industry.
Which is fuel, getting the right kind of fuel.
Right. And they're tackling it with vertical integration. For starters, they acquired a company called Atomic Alchemy.
And what's the plan there?
So Atomic Alchemy is interesting. They use a different reactor to produce radioisotopes, which are used in medicine industry. It's a high-margin business,
So that's an early revenue stream.
an early high-margin revenue stream. That pilot facility should be running by mid-2026, so it acts as a financial bridge while the big power plants are being built.
Smart. And what about the fuel for their own power plants? I saw something about a huge new facility in Tennessee.
Yes, the Advanced Fuel Center. This could be up to a $1.68 billion investment. It's set to be the first privately funded fuel recycling facility of its kind in the U.S.
Recycling is the key word there. Why is that so important?
Because current reactors are, well, they're incredibly inefficient. They only use about 5% of the energy in the fuel in one pass.
And their tech can get at the other 95%.
That's the plan. They can recycle that used fuel to recover the rest. It positions them for a durable, long-term fuel supply that they control.
Okay, that's the long-term plan. But what you told me about earlier, the plutonium,
Mm.
that sounds like the real near-term game changer.
It is the biggest game changer, I think. It's an incredible opportunity. The government is making up to 20 tons of surplus plutonium available.
This is from like old weapons programs?
Exactly. Material that was a huge liability for taxpayers. I mean, the government was going to spend billions just to get rid of it.
And now Oklo can use it as fuel. How much power are we talking about from 20 tons?
It's incredibly potent. Those 20 tons can be turned into about 180 metric tons of their Aurora fuel. That's enough to run, 10 to 20 of their first plants.
That is a massive head start. And it
Yeah.
lets them sidestep the whole HALEU problem, doesn't it?
It completely avoids the HALEU bottleneck. High-assay, low-enriched uranium is what most other advanced reactors need, and the supply chain is barely there.
So while everyone else is waiting for HALEU production to ramp up,
They can just blend this high-potency plutonium with regular unenriched uranium and go. It's a ready-made fuel source that could accelerate their deployment by years.
wow. So they have the regulatory fast track and now a fuel fast track. So who are the customers for all this power?
The demand is, well, it's explosive, and it's coming from one place in particular.
AI data centers.
AI data centers. Oklo has said that their 14-gigawatt pipeline is pretty much all hyperscaler customers.
We're talking the big tech giants, the Googles, the Amazons of the world.
The very same. And their strategy for selling the power is also pretty smart. They're not just rushing to sign standard power purchase agreements or PPAs.
What are they doing instead?
They're moving a bit more slowly to get a bit of deals like power prepayments.
Which means the customer pays up front, funding some of the construction.
Exactly. It shifts capital risk off of Oklo and onto these massive customers who are desperate for clean, reliable power.
That's a powerful negotiating position. What about validation from outside the U.S.? Any international partners?
Yes, very strong partnerships. They've teamed up with a couple of big European companies, Nucleo and Blycala, to work on fuel fabrication here in the States.
And there's real money behind that, right?
A lot of money. The vehicle affiliated with Nucleo is planning to invest up to $2 billion.
Yeah.
That's a huge vote of confidence from the international community.
Okay, so let's try to synthesize all of this. It's such a story of two extremes. On one hand, you have a high-risk, pre-revenue company.
Right. Facing real dilution concerns, insider selling, and guaranteed losses for the next few years. The short-term picture is, it's painful.
But on the other hand, the bull case is it's incredibly compelling. They have these regulatory and fuel supply advantages that nobody else has.
And they're actually executing. The whole story is shifting from theory and paper to, concrete and steel. The question for investors isn't really if advanced nuclear is coming.
It's whether Oklo can use this first-mover advantage, especially that plutonium bridge fuel, to get their plants built and secure those data center deals.
Before the enormous capital need overwhelms the balance sheet.
Yeah.
It really is a fascinating balance of massive risk and potentially epoch-making reward.
A perfect summary. If you want more in-depth analyses like this one, be sure to subscribe, like, and comment below. We'll be back tomorrow with another Stock Talk.